Greetings. My name is Lincoln Rice, and I'm the coordinator for the National War Tax Resistance Coordinating Committee. Sometimes we call it NUTRIC for short. And this is a War Tax Resistance 101 session, refusing to pay for war and resisting U.S. militarism. So during this session, we'll be going through the basics of war tax resistance. Some important disclaimers before we get started. Some methods of war tax resistance are not legal and should be considered civil disobedience. Government laws and policies are subject to change, so we'll share our historical experience, but realizing that that could change. War tax resistance counselors aren't here to fudge or cheat or try to employ gimmicks. We just want to share with information with people who want to refuse paying for war and the different risks associated with different methods. Some people giving this session might say they're not an accountant. I actually do have a bachelor's degree in accounting, but I can say everything I'm sharing tonight, everything I'm sharing during this session was not something that I learned while I was earning my bachelor's degree in accounting. I learned how to do audits and how to fill out tax forms, but it was never taught about if someone refused to pay, what are the different methods, what are the risks, what would happen to them. None of that was ever covered. I learned that from the experience of people who've been doing it for decades before me. But also, I'm not a financial advisor, I'm not a lawyer. And so, this is again just sharing information of those who've been doing this for decades. The National War Tax Resistance Coordinating Committee is a coalition of groups across the United States that's worked together now for 42 years to support people who want to refuse to pay taxes for war and violence. Uh, Touching on that a little bit more briefly, the US spends more on its military than the next 10 countries combined. Um, the Pentagon's never passed an audit, so we're not even clear where all of this money necessarily goes. And oftentimes some of these funds, weapons, are then diverted to local and state police departments to be used in their own precincts. Even within the US budget, near and in any given year, around 40 to 50% of the federal budget is used for current and past military expenses. So this is a pie chart put up by War Resisters League, and they comb through the president's budget each year to come up with these more accurate numbers of spending. Uh, the main reason that most war tax resistors have resisted over the years has to do with war and militarism. Um, there are additional reasons, including war crimes or the fact that the military budget is, with it being so high, is taking funds from other areas. The more recent war in Gaza, which estimates are around 70 to 75% of the weapons used there were purchased with US funds, with US support for the state of Israel. More recently, there's a lot of interest because of the Trump administration, which has been doing deportations, and there have been questions about constitutionality, et cetera, et cetera. Again, I don't want to focus on that so much. There are many people who are more expert in different political situations than I am, but I'm here to share more about our experience and expertise that we do have when it comes to war tax resistance, um, but militarization of police and also the impact of war on the environment. Currently, the Pentagon is the number 1 institutional user of oil in the world. So it has a much greater effect on the increase in greenhouse gases um, than any other institution. I'm not going to go through these different highlights of war tax resistance, but needless to say, if we have enough information about a civilization, we can usually find an instance of war tax resistance. One of the more recent inspirational stories of war tax resistance is from Myanmar. After the military coup in 2021, we saw millions of people in Myanmar refusing to pay their utility bills as a way to defund the military regime there. Which tax resistance method is right for you? So there's a lot of flexibility. This could also be viewed as complication, but hopefully on a positive side, you know, For each person, depending on their circumstances, goals, risk tolerances, values, life situations, you can mold a method of war tax resistance that works right for you. So we definitely would recommend people take their time and explore different options and methods that fit your situation. Go in knowing exactly what you're doing. Essentially, war tax resistance falls into two basic methods. Um, Refusing to pay some or all of the income taxes you owe, which would be a form of civil disobedience and illegal, and or earning less than the taxable income or earn less than a taxable income. So this is the only legal method. It means you don't owe any federal income taxes. Generally speaking, this is based on the standard deduction. So if you're single, the standard deduction is $15,000. If you make less than that, you don't owe any federal income taxes. If you're married, the standard deduction is 30,000, and if you make less than 30,000, you don't owe any federal income taxes. There could be other tax credits, tax deductions that you could make possibly significantly more and still owe nothing. Again, we're not going to if you wanted to look into ways to lower your taxable income, it'd be more appropriate to talk to a tax preparer. This here will be focusing more on methods of, or at least the knowledge of if you're going to be resisting your federal income taxes, um, which, what's the best way to do it for you based on your goals uh, and the risks that you want to assume. First, I want to touch base on the situation with employees. So if you're an employee, that means at the end of the year, you get a W-2 form that says how much money you made. It also shows how much money was removed for federal income tax, state income tax, if that's in your state, um, healthcare expenses, Social Security, Medicare, it's all removed. There'll all be little boxes for it. But we in the United States, either your first day on the job or shortly after you're hired, they'll give you a W-4 form. It's an IRS created form, but it doesn't go back to the IRS. It's just a form that your employer will give you so that you can tell your employer based on what you put in that form how much in federal income taxes to take out of each paycheck. So this doesn't apply to everybody. If you're self-employed, this doesn't apply, but so we're not going to go through the specifics of how to fill out the W-4 form to lower withholding or eliminate withholding, but we do have a web page, nutric.org/W-4. There's also a link to it in the description for this video. If you go there, you'll see resources, including another short video that goes through how to fill out the W-4 if that applies to you. But essentially, this is if you fill out your W-4 in such a way that federal income taxes aren't removed from your paycheck, then it gives you the option once tax season rolls around and it's time to file your tax forms, if you want to refuse or not. For many people, if they just sign their name, they might actually have too much money coming out. If they just signed their name and didn't fill out any other information on the form, they might be overpaying and getting a refund at the end of the year, which often means they're giving the federal government a 0% interest loan to pay for war and violence during the year. So at the very least, you might want to adjust your W-4 so that you're not getting a refund. And that would actually be legal. That's what the IRS hopes you'll do with that form. If you're self-employed, that means you're working as a contractor or a consultant. If you're working for companies, they may give you a W-9 to fill out when you start working, which asks for your name, social security number, and address. So that at the end of the year, if they pay you $600 or more, they'll send you and the IRS a 1099 NEC form, non-employee compensation form, and this will be reported income. And if you're doing work for, just households, let's say as a plumber, you're self-employed, just doing work for different families, then your income is not being reported to the IRS, which might make you more inclined to not file, but we'll get to that shortly. But essentially, if you're self-employed, you are responsible for paying all of your own taxes. Nothing is withheld. So you have control over how much you want to pay for your federal income taxes. And this also includes how much you want to pay of Social Security and Medicare. Some more tax resistors also refuse to pay Social Security and Medicare. Again, that's only an option if you're self-employed. The money that's given for those programs does get used by those programs. It's earmarked for them, but many presidents have borrowed from those programs to fund different wars, but they've always had to pay it back. So again, it's an individual choice. There used to be folks in the gig economy that the reporting requirements for receiving a 1099K were much higher. But for tax year 2025, we're going to see that reporting limit drop to $2,500 and next year drop to $600. But for example, if you drive for Uber or you sell on eBay, you're not actually working for Uber or working for eBay, but they're a third party that handles your income before it gets transferred to you. They're connecting you with customers. So again, you're self-employed, but not self-employed in the same way that if you were doing work directly for a corporation. They're they're just a referral. So when there's a third party referral service that's handling income for you, like Uber or eBay, that could result in a 1099K form with your reported income. Again, the reporting limits will be dropping to $600 for that starting next year. So filing taxes versus not filing taxes. One of these methods kind of makes you more open and available for collection, and the other, it's harder to find you. So again, some of this might come to personal choice or based on your situation, etc. But if you're filing, it allows you to send accurate tax forms to the IRS. If you're sending a paper form, paper 1040 forms with your tax form, if you're sending paper tax forms and not e-filing, it also allows you to send a letter of protest if you would like to make your position known. It does make IRS collection easier because before the IRS can try to collect money from you, they need to know how much you owe. They know how much you owe once you file your taxes. If you don't file your taxes, then they have the extra step of needing to file for you. With filing, there is a 10-year statute of limitations once your tax is assessed. Again, your tax is assessed once your tax forms are processed. So after 10 years, any tax that you owe and any penalties or interest associated with that tax debt completely disappear and they can no longer be collected on. Filing does make it easier to apply for scholarships, FAFSA, student aid funding. It doesn't require that you file, but they often like to verify your income for eligibility by looking at your tax forms. Depending on who's handling the student loan application, they may be more willing to verify income through other sources, but it's really their prerogative. For health insurance subsidies through Obamacare, it's actually required that you file. If you don't file federal income tax forms, probably eventually they'll notice and they'll remove you from receiving those subsidies. If you don't file, we'd still suggest that you fill out your tax forms anyway. Sometimes people just having the filled out tax forms when they've applied for student loan, when they've been applying for student loans, those entities have accepted those tax forms, even though they were never filed. Also, if the IRS filed for you at some point in the future and grossly overstated or overestimated your income, you'd have records to dispute that. It does, as I mentioned, makes collection harder because the IRS has to file before they can attempt collection, and it delays the statute of limitations. It could either never start or it would start once the IRS filed on your behalf. And there is an additional penalty for not filing. So now I'd like to touch on some myths of war tax resistance and then conclude with what actually could happen. So the thought is you'll go to jail simply for refusing to pay income taxes without any other extenuating circumstances. Only 2 war tax resistors have gone to jail since World War II. I will point out Tony Serra in 2005. He is an activist lawyer in the Bay Area. Excuse me. And so I think he was partially singled out not only because he was an activist lawyer, but because he was a lawyer, and they could prove that he fully understood as a lawyer the implications of refusing to pay his federal income taxes. So I would caution lawyers and CPAs that they might be at a higher risk if they are practicing war tax resistance. But otherwise, over the last 25 plus years, the only war tax resistors who have done any jail time were those who were fraudulent in their tax filings. And by that, I mean they filed forms, but either tried to hide income or they tried to take deductions or tax credits that were not due to them. So, in most circumstances, if you're going to file, we recommend that you file accurately because the IRS is willing to use more of its limited resources to criminally prosecute someone if they're filing false forms at the end of the year. Another myth about war tax resistance, the IRS will come to take my house, car, or property. This actually used to not be a myth up until the mid to late 90s, but they had a change in policy at that point. And really, since the late 90s, they've not taken any piece, seized any piece of property from a war tax resistor. It seems to be a process that they save to embarrass the uber rich. If I don't pay my federal income taxes, they'll just get the money, and with penalties and interest, they'll get more from me in the end. The last time that the IRS shared information about the gross tax gap, they shared this graphic showing that for the year they were talking about, almost $500 billion wasn't paid in federal income taxes that they believe was owed. And they shared that really, when all is said and done, they believe that for any given tax year, they'll collect about 12 to 13% of unpaid income taxes. So again, most income taxes that are unpaid are never collected upon. War tax resistors don't pay for things that we need. So it's a practice among war tax resistors who are refusing to pay all or a portion of their federal income taxes to redirect that money to pressing needs, organizations, or individuals that could really use those funds. So again, we're not promoting something to skirt responsibility to others in society. But it gives us more of an opportunity to look at where funding has been cut or where there are groups doing great work that we'd like to see them be able to do more of that great work so we can redirect those funds. What are the actual risks then associated with it? First is letters. You're almost guaranteed if you're a filer, you will get a lot of letters. So I can guarantee that. Most of them, perhaps all of them, will be automated. Um, when it comes to beyond letters, there is a chance of a salary or Social Security garnishment. Salary garnishments right now, if you're a wage employee, are relatively rare. They do happen every once in a while. Social Security garnishments, where they can take 15% of someone's Social Security, is actually quite common, I think, because it's another federal organization and they have more of a working relationship together. So those war tax resistors who then reach the age to receive Social Security and apply for Social Security often see within their first year of receiving Social Security that that is garnished. Bank account levies, those do happen from time to time. Again, still pretty rare. More common is a state refund levy. If you overpaid your state taxes, that could happen. That could be seized. Interest and penalties, kind of a good rule of thumb, is that if you file during the 10 years before the statute of limitations concludes, your tax debt will triple. So if you're refusing $100 for a given year, at the end of 10 years, it'll be about 300 before it expires. 1,000 would become 3,000 and so on. We already talked about health insurance subsidies and student loans. Once your tax debt reaches $25,000, they're pretty good about sending out a notice of a public lien to your local county courthouse. The main effect that this would have is if you're a homeowner and you're going to sell your home, before the bank would pay you the money from the new buyer, they would probably check with the county courthouse, see that you have an outstanding tax debt, and the IRS would get first dibs on that money and you'd get the remainder. The other thing right now, if you have a seriously delinquent tax debt, which right now for 2025, the IRS considers to be $64,000. It goes up each year with inflation. You would no longer be allowed to renew or get a new passport. If you currently have a passport, you can keep it till it expires. But that's something to keep in mind for people who either need to travel, love to travel, etc. You might want to keep your tax debt under that $64,000 mark if you need your passport. That could change in the future. It's still unclear if that's a constitutional law or not. It went into effect in 2018, but there hasn't been any serious any serious appeals of that law or in court cases yet. There are 9 community property states, those states in red. If you live in one of those states and you're married, it won't matter. Technically, it doesn't matter if you file separately. The IRS, if they're thinking about it and someone's actually assigned to your case at some point, your spouse, even if they file separately, could be collected upon or have a bank account levied, things of that nature. In community property states, any debt or assets obtained after you get married belong to both spouses. If you're not in a community property state, which is most, and you have a spouse who chooses to not be a war tax resistor, you could to on the you could put all of your assets in that spouse's name as long as you file separately. The tax debt doesn't belong to that spouse. Um, Again, the caveat is you have to file separately. If you need Obamacare subsidies, it's actually a requirement that to receive them as a married couple, you need to file jointly. So causes some potential conflicts, but we wanted to make people aware of that. So lastly, Nutric is here to be a resource. Our website is gigantic because we know there's a lot of different situations and people are looking to resist in different ways. So please take time, look through our website. All of our resources are available for free. At our website, you could also sign up for our newsletter, a mostly weekly blog. There are interviews, tax day activities. We have gatherings throughout the year. So feel free to make use of Nutric as a resource. Lastly, here's a list of resources that you'll also see in the description to this video. So our website, the W4 website link with those resources, the counselors list. We have a list of war tax resistance counselors by state. So if you want to touch base, perhaps even meet for coffee with someone locally in your area who's a war tax resistor, go to this list. Those people have gone through some additional training to be able to help guide people through what would be the best fit for you if you're considering war tax resistance. So it's kind of more, they're just there to help you discern. They're not there to tell you what to do. But they're volunteers and they're very happy to do this. My biggest complaint from them is they don't have enough people contact them, but they're happy to talk to you about this. Again, a link if you want to sign up for our newsletter. We have links there for things like our Instagram, Facebook. But lastly, I also mentioned this link for the tax penalty fund. We host that group on our website, but they're separate from Nutric. They're a mutual aid group that if you are one of the unlucky few who are collected upon, they essentially pass the hat 3 to 4 times a year if there's a need. And they don't try to reimburse people for the principal amount of any tax debt that was collected upon, but they do pass the hat to reimburse people for the additional penalties and interest, because especially if it's collected near the end of the 10-year statute of limitations, your tax debt could have tripled and two-thirds of what was collected from you may have just been penalties and interest. So they're there to help kind of lessen that blow, and a good reminder that we're not in this alone. We're in this together. And so again, thank you for taking the time to watch this video. Feel free to reach out to a counselor or email me or call the office if you have any further questions or comments. And again, thank you for taking the time to consider war tax resistance.